If you're planning to buy a home in Newark or anywhere in New Jersey, there's something many homeowners experience that almost nobody warns them about. Their mortgage payment goes up after the first year. And the risk is many buyers assume something went wrong with their loan. But in many cases, it's actually completely normal. Today, I'm going to explain the hidden costs of home ownerships that many buyers never fully understand, including closing costs explained line by line, escrow accounts and why payments change, property taxes and reassessments, HOA surprises that can affect your payment. By the end of this video, you'll understand exactly why mortgage payments sometimes increase after year one. Let's break it down. Many buyers believe their mortgage payment is only the loan payment, but most mortgage payments actually include four components: principal and interest, taxes, and insurance, often referred to as a PITI, P-I-T-I. The principal and interest portion is usually your fixed for 30 years, but the other components can change, which is why payments sometimes increase after the first year. Now let's talk about something that surprises almost every first-time homebuyer: closing costs. When you buy a house, the down payment is not the only money required. There are also closing costs, which are the expenses required to legally transfer the home from the seller to you. Think of it like buying a car. You don't just pay for the car itself. You also pay for registration, title, taxes, documentation fees. Buying a house works the same way, just on a larger scale. Most closing costs fall between 2 and 4% of the purchase price. So let's use an example of if someone was buying a home in Newark for $450,000. Typical closing costs might be somewhere around $12,000 to $15,000. Now let's break down what those costs actually are. One of the first costs is the appraisal. An appraisal is when a licensed professional evaluates the property to determine what the home is actually worth. Because the bank is lending hundreds of thousands of dollars, they want to make sure the property is worth at least what you're paying. The appraiser will compare the home to similar properties that recently sold nearby. This typically costs around $650 to $950 in New Jersey. The lender also has to pull your credit report. This shows your credit history, credit score, debt obligations. Lenders use this to determine whether you qualify for the mortgage. This fee is usually small, typically around $175 to $350. Loan origination or lender fees. This is the fee charged by the lenders to process and prepare your mortgage. It covers things like underwriting, loan processing, document preparation. Think of this as the administrative work required to create the loan. This fee varies by lender, but is often around $1,000 to $2,000. Title search. Before you buy a house, someone needs to confirm that the seller actually owns the property and has the legal right to sell it. This process is called a title search. A title company will research the history of the property to make sure there are no issues like unpaid liens, ownership disputes, legal claims. The title search typically costs around $300 to $600. Title insurance. After the title search is complete, buyers purchase something called title insurance. This protects you and the lender in case a problem with ownership appears later. For example, imagine someone claiming they were supposed to inherit the property, or an old lien that wasn't discovered. Title insurance protects against those risks. In New Jersey, this usually costs between $1,500 and $3,000, depending on the purchase price. Attorney fees, common in New Jersey. In New Jersey, it's very common for buyers to use a real estate attorney. The attorney reviews contracts and protects the buyer during the transaction. Typical attorney fees are around $1,000 to $2,500. Recording fees. Once the transaction is complete, the new ownership of the home must be recorded with the county. This officially documents that you now own the property. Recording fees are usually a few $100s, typically around $150 to $300. Prepaid property taxes. Now here's one of the costs that surprises many buyers. At closing, the lender often collects a few months of property taxes upfront. This is not an extra fee. It is simply prepaying taxes that will be due later in the year. For example, If property taxes are $7,500 per year, the lender may collect several months upfront for escrow. That could be around $1,500 to $2,500 depending on the timing. Before closing, you also need to purchase homeowner's insurance. This protects the home from events like fire, storm damage, certain accidents. Most lenders require the first full year of insurance paid at closing. In New Jersey, this often costs about $1,200 to $2,800 per year. Initial escrow deposit. Finally, lenders usually collect an initial escrow deposit. Remember earlier when we talked about escrow being a savings account for taxes and insurance? At closing, lenders typically put several months of those payments into escrow to start the account. This helps ensure the account has enough money when the first bills come due. Why closing costs exist. So when buyers see closing costs, it's not just random fees. Each cost exists to protect you as the homeowner and the lender providing the mortgage. The good news is that in many transactions, some of these costs can sometimes be negotiated with the seller. But understanding what they are ahead of time prevents surprises when you see the final numbers. Escrow essentially is a savings account managed by the lender. Each month, part of your mortgage payment goes into escrow. That money is used to pay property taxes, homeowner's insurance. When those bills come due, for example, let's say your annual property taxes are $7,500 per year. The lender collects about $625 per month and stores it in escrow until the tax bill arrives. This protects both the homeowner and the lender from missed payments. Now, here's where the payment change happens. When you first buy a home, lenders estimate property taxes, insurance, but those numbers can change. After the first year, the lender performs an escrow analysis. They compare what they estimated versus what actually happened. If taxes or insurance increased, the escrow payment increases as well. That adjustment gets added to your monthly mortgage payment. Property taxes are a major factor in New Jersey. New Jersey has some of the highest property taxes in the United States. And taxes can change due to local budget changes, municipal tax increases, property reassessments, home improvements. Let's say a buyer purchased a home and the tax estimate was $7,500 per year. But after the reassessment, the tax bill increases to $8,400 per year. That means escrow must now collect $900 more per year, which equals $75 more per month. That's one of the most common reasons mortgage payments increase. Another situation that surprises buyers is tax reassessments after purchases. For example, a home might have been assessed based on an older value. Then after selling at a higher price, the municipality reassesses the property. This can increase the tax bill, which then increases the escrow portion of the mortgage payment. Insurance is another factor. Homeowners insurance premiums can change due to inflation, natural disaster risks, insurance company price changes. If insurance increases from $1,500 per year to $1,900 per year, that additional $400 annually also increases the escrow payment. For buyers purchasing condos or townhomes, there may also be HOA fees. HOA stands for Homeowners Association. These fees cover things like exterior maintenance, landscaping, amenities, insurance for shared structures, but HOA fees can increase over time. If an HOA decides to raise monthly dues or impose a special assessment, homeowners may have additional costs, which is why reviewing HOA documents before purchasing is important. The key takeaway is this: when a mortgage payment changes after the first year, it usually has nothing to do with the loan itself. The interest rate is still fixed. The loan terms are still the same. The change is usually related to taxes, insurance, or escrow adjustments. Understanding this ahead of time prevents confusion and surprises. Buying a home is one of the most important financial decisions people make, but there are costs that many buyers don't fully understand until after closing. Closing costs escrow accounts, property taxes, insurance changes, HOA fees. Understanding these factors help homeowners plan for the true cost of homeownership. If you're planning to buy a home in New Jersey and you want to understand what your full monthly payment will look like, what closing costs to expect, and how escrows work, check the link in the description. I'll walk you through the numbers personally. No pressure, just real mortgage guidance. If you found this helpful, like the video, subscribe to the channel. And next week, I'm breaking down how lenders actually calculate mortgage rates every single day.